speaking of NBFCs, the country's largest home loan lender was also under pressure through majority of last week. And Friday's session, of course, did reasonably well, but was lower in 3 of the 4 trading days. Sajid Bangat spoke to Keki Mistry on Friday to find out what he made of the sharp intraday fall in most NBFC stocks, including HDFC. And Sajid, of course, started off by asking Mistry what could have caused such a drop.
Well, my sense is that what happened was that one of the mutual funds sold a paper of one of the NBFCs or housing finance company at a much higher yield than what the market expected. And that caused a flooding of panic in the market because people started spreading a lot of stories and a lot of rumors that many of the NBFCs and smaller housing finance companies had funded themselves largely out of short-term paper. And a lot of that short-term paper was from mutual funds. And therefore, when this came up for maturity, and if the mutual fund did not renew the paper, then the concerned NBFC or housing finance company would not be able to pay the money back on time, and that could result in a default situation. So I think that was the fear in the market. To my mind, it is unfounded. I'm not aware of some of the housing finance companies or NBFCs, the smaller ones, and how they borrowed money. But generally speaking, the well-run housing finance companies would have matching assets and liabilities. So therefore, to short-term liabilities, there would also be short-term assets.
That's right, Mr. Mistry. If you look at the market, how it's been doing for the last 2 weeks, especially after the IL&FS issue has cropped up. Yields for many of the housing finance companies have gone up sharply, especially in the shorter tenure. Do you see this as a point of concern going forward?
I don't know what you mean by a cause of concern, but yes, yields have been going up, but yields have been going up across the board for everything. You see, the external environment is also not very conducive to low interest rates. Oil prices being where they are, the currency being where it is, the current account deficit being where it is. I think these are all pointers to the fact that one should expect to move into a higher interest rate regime in the period to come.
Many of the NBFCs were also borrowing heavily from the market because the rates available in the market was much lower than rates available from the banking front. And do you see that changing now? And from an HDFC point of view, what kind of what percentage of borrowing is from a short-term perspective and medium and long-term?
If you look at our website, we give a presentation which gives all these numbers, so I won't be able to speak off the cuff. But we have matching term assets and liabilities. If you look at the presentation, I think it's on page 23 or 24, where the asset liabilities of 1 year, 2 year, 1 year, 2 to 5 years, over 5 years duration we give those details. Just to run you some numbers, we don't take asset liability mismatches. We have more assets maturing in the next 1 year than we have liabilities maturing.
So in that sense, you are well placed from there. But from an industry point of view, do you see some pressure coming on on the industry because of the hardening of yields?
Well, I guess what the industry would also do is look at their lending rates on the asset side. So if the liability cost goes higher, the asset yields will have to go higher. So we are moving clearly into a higher interest rate regime. There's nothing specific to NBFCs or housing finance companies. It's an across-the-board sort of a phenomenon.
The mutual fund which sold off nearly 300 crores of paper today said that they are trying to bring down their maturity period, and that was one of the reasons why they offloaded DHFL paper, and that had a repercussion on the stock price as well, because the market had some fears and rumors also started doing the round. Do you see today's fall on some of the stocks as a irrational way of looking at it?
I can't comment on specific stocks because I do not know the financial position of these companies, so it would not be fair for me to talk about it. But yes, the market movement per se was irrational, and the markets always tend to behave like this. So we've seen this in 2008, we've seen this in 2013, and we've seen this several times earlier before 2008 also. That when markets fall, it becomes an irrational fall, and the fall becomes sort of accentuated by rumors that keep getting spread in the market. And those rumors cause more worry, more fear, and that fear leads to more selling in the market.